Not surprising after the roller coaster years of the last decade and the rapidly changing business needs that chief financial officers of today aren't expected to be just an accounting specialist only, but also a business strategist. Strategic thinking is key. Your fellow senior managers are expecting a broad vision. They're expecting you to have ideas that go beyond your organization's finance and accounting function. They want you to have a strategic influence on how the entire operation works. Naturally, to do that, you've got to ensure that you and your team aren't being distracted by day-to-day processes that don't work so well. Not so long ago, the CFO of a large retailer found that the company's cash flow was suffering because they were still using a paper-based operation and didn't have an efficient way to track bills and payments. The pressure that caused led to a high staff turnover and consequent hiring and training costs, and a team that couldn't react to the needs of the business. Something had to be done, not only to make the finance and accounting function work better and boost the cash flow, but also to enable the CFO to work strategically in a fast-moving marketplace. A leading media company had similar problems. Because they had too many systems working in conflict, they couldn't work out how many invoices were being processed at any given time or location. In both cases, the CFO took a strategic and very bold decision. Both agreed that their companies did not exist to chase money, but to make it. And so both deployed specialists and the latest systems to do routine processes much cheaper and more efficiently. The retailer removed the need for any manual checks and can now track relevant and credible data on its accounts receivables. Likewise, the media company now has achieved real-time visibility over all its transactions. Here's another example of a CFO's strategic thinking. One telecoms business wanted to implement a network management system that would make it more agile in a market that demands constant innovation, namely the fixed, mobile, and converged broadband networking. The CFO had to make a judgment about legacy systems. Were they worth continuing? And what was the most cost-effective way to bring in new technologies, applications and services so that next-generation products could be taken to market more quickly to stay ahead of the competition? The CFO's financial expertise and strategic vision enabled important decisions to be made about how the legacy systems were managed and how migration tools were put in place to support product development. The key was to keep the network stable and serve existing customers whilst improving margins and reducing costs to fund the future. Another CFO in one of the biggest financial services companies decided that the more difficult trading conditions demanded a rationalization of production support services and the creation of a shared service model to ensure that those services were fit for purpose into the future. The CFO implemented a project that saw disparate production support services brought together in a single location so that transparency could be increased, better relationships forged with the rest of the business, and that the business could launch new initiatives and products with greater freedom. Naturally, costs were an issue too. Using external resources, the CFO got the whole project up and running, all the systems tested, and delivered a seamless transition that increased the bank's agility and saved a third in operating costs. Strategic thinking pays. It delivers benefits to the whole business.